Well, it will be my honor and pleasure to conclude your work. It's quite a perilous role because you've been extremely fruitful and dense in your exchanges today. I apologize for not being able to attend the gala dinner last night. It so happened that there were a number of Euro guests. We welcomed in the National Central Bank, and I wasn't able to be with you. I would like to greet two Bernards and one Gabrielle. Bernard Spitz, of course, who is an old and long-standing friend, and your chairman, Bernard Delas, who's been vice chairing ACPR and with whom I work on a weekly basis, and Gabriel Bernardino. I would like also to thank FFA because this is the opportunity I have in the year to speak French with Gabriel, knowing that he has great command of French, knowing that we speak English with Gabriel the rest of the year. We don't say it enough, but the financial industry has been long-standing force and strength and asset for the French economy, and this should be said most. Insurers are a key asset for financing the economies. This will be my brief and first point. Then I will talk about the regulatory developments to pay tribute to progress made, and also speak about a few European challenges we have ahead of us. And finally, I will touch on the limits of insurability, which has been your topic today, which is as old as your business since the ancient times, providing protection. And some provocative people say that the loans protecting against the grand adventure was the embryo of insurance coverage, but I will close this digression. If we content ourselves with 1347 in Genoa and the first contracts, of course, the limits of insurability have kept being pushed back. Having said that, these issues have taken on greater acuteness with the emerging new risk involving or including Brexit and climate change without these two issues being connected. First, let me speak about insurers, and statistics have it that ACPR published some 10 days ago its annual report, which confirms that the French insurance industry has been very resilient, very strong. Its wealth of data, facts, and numbers do access this report, and also EIOPA published its numbers, and I think I understand that according to EIOPA, in the first quarter of 2018, the first half of 2018, the French insurance market has become the first and largest European market in front of Germany and the UK. And be it for the over 35 billion euros in non-life premiums or the 1.1 trillion euros in technical premiums. So these numbers are of great magnitude. You represent by far the first institutional investor in Europe, more than 1/3 of total assets under management by Eurozone investors, knowing that our relative weight in the Eurozone is a bit more than 20%. So insurance companies are an asset for France and play a key role in financing the French economy, and their role should increase further. It is an issue also with the shareholders' equity of the companies, knowing that the economies is being financed, and economy which is an innovation economy. Innovation economies finance themselves more based on equity because there are more risks and there must be more prospects for profits. And the shareholders' equity of companies only account for 77% of the Eurozone GDP. Mid-2018, France stands at 76%, very close to this average, versus 124% being the US number. This is not the only explanation for the gap and the lag we have in terms of innovation, but this is a key driver. Now, this brings me to my second point on regulatory opportunities. I would like to tell you I'm satisfied retroactively so, that the single unique debiting scheme, the PFU, has not penalized the life insurance business, contrary to some concerns. But I would like to say that the draft pact law in France, and the French Finance Minister Bruno Le Maire announced this last night, that the draft pact law will stimulate investments into equities and long-term investments. And dear Bernard, your work contributed to this, to develop euro growth, euro croissance, with an ambitious goal of 20 billion euros. And you have contributed to this announcement versus the current 2 billion. And the lawmakers have expanded the number of instruments. Now it's a question of delivering on the hopes, and we all expect a new start, what I would call a reset of euro growth, with commercial engagement from insurance company, with a new imagination, knowing that the simplified framework will be in place. Now, with respect to life and savings, there was a hot debate on annuity or capital exits. My role is not to repeat the discussions. We have contributed to this debate with you on your side. I rejoice jointly with you that the principle of a product destined for annuities has been retained and maintained, and that everywhere else the option of capital exit or annuity exit has been the case. If I rejoice, it is not because I rather defend an occupation versus another, but an annuity-based revenue or income corresponds more to retirement type of solutions and favoring equity-based products. But it's up to you to play. The potential is huge to go from to take retirement-based or pension-based assets under management and transit them from 200 to 300 billion, and this is within our reach. And of course, we need to see to it that the policyholders are properly informed, especially with all unit-linked base products when capital in return is not guaranteed. And the Solvency II framework, framework should be should be the subject of a full assessment after its 3 years of implementation. Now, this issue has raised lots of passion in the debates. Beyond passion, it is to be observed that with Solvency II, the insurers have much improved the way they have managed their capital and risk, but this positive observation should not sideline legitimate issues and questions, the first being that on the impact of investment in equities and the funding of the European economy and economies, and the finance minister discussed this yesterday. And there's also the issue of volatility and that of complexity. Now, the review in 2020 means that the status quo should not be an option. Whereas preparatory work is just starting, I would like all topics, including the most thorny issues, be addressed and reviewed, and encourage insurers to actively participate in the consultation process. And I take a commitment jointly with Bernard Delage that ACPR will play its full role in the upcoming discussions. I know, dear Gabriel, that such discussions are not so easy, but it is important that we open them up. I would like to add a point which is very current. It is indispensable that European supervisors should apply supervisory requirements with the same degree of discipline and rigor. Successive failures of insurers operating under freedom of service, and here I have especially in mind the construction sector insurers, should be applied everywhere. ACPR has been engaged to manage this crisis, which has affected dozens of thousands of French policyholders, but it is important that a convergence of supervisory practices become a reality, and this is a priority, and we are fully supporting the work done by EIOPA. I will be very blunt and frank. It is not reasonable to apply the new IFRS 17 standard today, given the current state of discussions, irrespective of the complexity of the European governance with these standards. There is an obvious problem with the timing and scheduling, and the ISB board seems to be prepared to open discussions to this effect. Also, beyond scheduling and timing, there are substantive issues, and we hope that this extended timeline will give us the opportunity to better address. Now, I would like to conclude with a topic which is more related to today's conference with respect to the emergence of new risks, which are as many opportunities and challenges to meet for the insurance industry. I will mention three such issues. First, short-term, Brexit, medium-term, cybersecurity, and the climate risk for the longer term. Now, for the short term, Brexit is unfortunately the risk which keeps us busy the most. ACPR is actively working to ensure appropriate transition, but it's high time that the insurers implement their contingency plans, and I pay tribute to the fact that a large part of the players in the industry have done so. This involves establishing new agreements of portfolio transfers and the establishment of being relocated in third party. Even if we do not desire it, we need to be prepared to face up to a no-deal situation. What would it mean? Well, we need to have European-level measures which would be preferable to solve the issues of providing coverage to European policyholders in a uniform manner. But if necessary, and as a complement, the draft bill of law, which was submitted to the French Council of Ministers on the 9th of October, will make it possible for France to take measures to manage situations when British insurance companies would not have transferred their contract portfolio, impacting the French policyholders. Another point I would like to make, as you may know, the European Central Bank and the Bank of England have led, upon requests by the British Treasury and the European Commission, work to list and inventory the financial risks and contingencies. This work has just been completed. They have examined, jointly with EIOPA, the insurance contracts, and I would say that overall the risks and contingencies seem to be, quote, manageable, unquote, as long as the protection of policyholders can be guaranteed. Over the medium term and beyond the timeline of Brexit, in a context of digital revolution, cybersecurity is, of course, gaining traction and is becoming a major concern affecting all companies. Insurers are among the first companies concerned because you hold sensitive data in your systems, but starting from and building upon your own experience against cyber risks, it is desirable that you develop your cyber security insurance portfolio of solutions. The economies need it, and it is very important for your own security. I will conclude by addressing the climate issues. Of course, it fits within the longer term, but it requires short-term actions. It requires that the Nat Cat insurance framework be reformed, and it should be the case next year. And climate change should be a field for investigation by the supervisors, because it is at the heart of our assignments. Climate stability or instability has become one of the drivers of financial stability over the long term. I heard Jean Jouzel, the climatologist, and the previous panel. I heard the numbers, statistics, and the physical risks, which are truly impressive. We need to be very clear. It is not up to finance, nor to we or you to substitute indispensable public policies to converge as close as possible to the 2-degree scenario. It is of great importance because sometimes people might delude themselves or may have the feeling that solutions might substitute public policies, but you as key institutions can play a key role to raise awareness of the risk and make sure that the economic decisions are well aligned. ACPR published in June of 2018 a report demonstrating that some 10 to 20% of securities held by French insurance would be exposed to the risk of transiting to a low-carbon economy. We at Banque de France and at ACPR created in December of 2017 on the occasion of the One Planet Summit meeting, and we've been actively coordinating a so-called, I will say it in English, network for greening the financial system, quote unquote, which has an acronym, NGFS, the network of central banks and supervisors for greening the financial system. So this NGFS started off with 8 pioneering supervisors in December of 2017. It has now 19 members and 5 observers, including the Sustainable Insurance Forum. And I believe this is a great coalition of the willing, which is very dynamic and has strived to make headway in advancing these issues, especially 2 issues, and your industry, insurers, are leading the pack ahead of the bankers and other actors in the financial industry. The first issue is with the disclosures of risk, and we know that the Article 173 of the energy transition law, that is not an easy issue. There are issues with harmonizing and converging data, and the Bloomberg platform at the international level in the context of the Financial Stability Board with the disclosure in France. We have mandatory disclosure. I believe this will become a requirement at the European and international level, but we still need to make progress on collecting and harmonizing data. So much for the snapshot view. There's an issue which is even more promising for the future, even if it's more sensitive at the technical level. It is what I call the videotaping of risk. That is basically the projections of dynamic stress tests over future risk. As we are talking about 10 to 20-year longer-term risks, stress testing makes it possible for us to assess how future risk will be distorted on asset classes. And for these 2 issues, the report of the first year of NGFS will be published and announced during a conference meeting we'll be organizing on the 17th of April 2019 in Paris. It happened, in fact, that I called green finance as new frontiers for the 21st century. Today, you spoke about pushing back the limits of insurability. Now, such pioneering metaphors are quite close with one another, and they reflect your entrepreneurial and innovation and pioneering spirit. I will end by stating a belief that is common and shared belief, is that this entrepreneurial and innovation pioneering spirit of insurers, that our world in 2018 has emerging and growing risk, and we need this spirit more than ever. Thank you.